Welcome to a CNBC Africa special. My name is Arnold Kwizera, coming to you from Kigali, Rwanda. Now, today we're going to have a conversation on the impact of COVID-19 on the fintech sector, and we're joined by a panel of experts. But before I introduce that, just to give you a little bit of context, one of the farthest reaching effects of the COVID-19 crisis has been the impact on the global economy. Now, business across multiple industries have felt the repercussions of the pandemic. Now, in particular, due to lockdown orders in which consumer spending stalled and customer behavior changed on a dime. Although many industries have been disrupted or changed amid the global pandemic, COVID-19's impact on fintech has been quite unique. Now, as consumers have experienced restrictions on setting foot in brick-and-mortar stores, e-commerce has been more important than ever. Now, to introduce this panel of experts who are going to break this down for us, I'll start with Mr. Norbert Haguma. He's the country manager of SPENN, based out of Rwanda. We also have Mr. Atwiine. He is the CEO of Eversend application across various African countries, based out of Paris, France. And Mr. Riyaadh Hansloo, head of Risk and Regulatory at Yoco, based out of Cape Town, South Africa. Thank you for joining us, gentlemen, and thank you for making the time. Just let's start from the top, and I want to start with you, Mr. Atwiine. Just a situation analysis of what COVID-19 has had, what kind of impact it has had on the fintech sector in the various industries in which you operate from.
Yeah, thank you very much, Arnold. Thanks for having me on your panel. I think what we've seen, the biggest effect we've seen is the accelerated digitalization of lots of financial services. So we play a lot in cross-border money transfers and remittances. So in the beginning, just around March, April, May, we saw big dips in the volumes that we were doing, but then around end of May, June, and then right after that, what we've seen is an acceleration of a lot of remittances that were previously being done in brick-and-mortar stores or agents coming online. So we see a lot more business coming online. And I think it goes across almost all financial services. We've seen lots of other things, like in our customers that we deal with now, we've seen lots of online gigs coming on. So people who are asking us, hey, how do I get paid if I'm doing a freelancer job? So online freelancing. We've seen a lot of exploding volumes also across internal in-country money transfer. So P2P is picking up. And generally, people are asking for a lot more financial services. People are asking us, how do I get involved in the stock market? How do I get involved in crypto? So I don't know the relationship with COVID right there, but we're seeing a massive adoption of financial services across the different services that we offer.
It sounds like good news for you there. No, but bringing you into the conversation and specifically to Rwanda, what has been the impact of the pandemic on the fintech space here?
It's been a really tremendous impact, I must say. In the early days of COVID-19, we had the central bank which mandated the use of cashless solutions, which was then also followed by a big reduction in the fees, mobile money fees, both for sending money, for paying services and things like that. And specifically for SPENN, we really saw a big increase in the people who adopted SPENN, who started using SPENN. And indeed, it kind of made us move faster. We accelerated the number of products we plan to put on the market. We introduced a savings product because we saw the need for, especially for small shops, to earn a bit of money on the payments they were receiving and not being able to cash out immediately. So the impact of COVID has been a much faster acceleration of fintech adoption, of cashless adoption. But I would say the biggest impact has been in the mindset of the people. People used to think of fintech as something that is a bit far away, interesting, but not immediate. And what COVID showed you was that not only fintech is a necessity, but it's also, in some cases, a must-have option.
No, but just to stick with you there, you mentioned a change in mindset, but policy making, has that caught up? Has that been accelerated as a result of the pandemic?
Yeah, absolutely. At least in Rwanda, what we saw in the very early days of COVID is that the government, the central bank, the Ministry of ICT were able to put in place measures that not just for the fintech, but even in education, that really accelerated the mobility of much of our economy online. But there's been also, I would say, some things have moved a bit slower than they should have. So it's not a perfect case, but I'm really positive about the steps that I've seen the government doing and the way that it engaged the public, even us, the companies that are active in the industry. We've seen the zero rating of much of the e-commerce ecosystem in Rwanda. That means people don't even need to have an internet bundle to be able to access internet services. We've been informed that they're going to allow for payment companies as well to be zero rated. That really is a big impact, because as much as the e-commerce and fintech has prospered, we still see a large portion of the population that is not financially included for many reasons. Some of them don't have phones, others don't have smartphones, but in some cases it's just a matter of being able to buy that bundle to to use the internet for the day.
Bringing Hansloo into the conversation, Riyaadh, quickly, what has been the situation analysis in the adoption of your kind of services in South Africa?
Look, thank you, Arnold. I think that the evolution of Yoco and how our services have evolved over COVID has been primarily SME driven. Small to medium enterprises, especially in South Africa, are the largest employer, but also most susceptible to massive movements that has been a consequence of COVID. And so the vast majority of the businesses and SMEs that we service have really tried to move their business online. And so that's driven Yoco's internal service and product offering, and really assisting some of our SMEs to migrate online. So for us specifically, we've been able to launch 3 new products to our SME customers, and whether that is integration into online stores, whether that is pay by link, where people are able to send requests for payments electronically. This sort of product development is being spurred on by COVID. South Africa has largely remained a cash economy and has been a little bit behind in terms of the adoption of DFS when compared to some of our African peers. And I think that the introduction of COVID has really sped up the movement towards a cashless economy.
Yeah, and just to stay with you there, and that's what has been many experts can't seem to figure out. In terms of South Africa is the biggest economy on the continent, but adoption of fintech, digital payments, has taken quite longer than the smaller economies. Why?
So I think it's similar to other African economies in that financial inclusion, and specifically financial inclusion at a policy level, needs to become an imperative. And so what has really happened is that while card penetration in South Africa is sitting at about 80%, businesses being able to accept those payments are roughly only sitting at about 8%. And so this really is an inclusion conversation around the reason why a lot of SMEs don't have access to methods in which they can accept payments. And that's primarily how our story emerged and how our product offering was born. But I think that addressing the structural barriers that exist with respect to financial inclusion would be the case here. And I think that also, there are some underlying factors in terms of how quickly money is able to flow within the system, how quickly SMEs are able to access those funds. That is really the motivating factor in driving the movement away from cashless. So us as a service provider really look to, give SMEs who are probably in need of that cash access to the cash that is due to them as far as possible to speed up the growth of their business.
Riyaadh and Stone, feel free to jump in just after Riyaadh's remarks. The situation of established enterprises versus startups like yours, how has that affected you during this period?
Look, I think that, especially in South Africa, where the fintech regulatory space is emerging, the regulatory landscape is probably not changed enough. There are, initiatives to help move that forward and provide for the inclusion, but the structural barriers that exist, around data interoperability, around digital identities, and licensing are still issues that many fintechs have to deal with and remain sort of the structural barriers for access into the more traditional financial services. I think that, like with financial inclusion, and addressing some of the underlying issues that facilitate this or make the problem worse is the only way that we're going to be able to do that. The South African Reserve Bank, as well as the Financial Sector Conduct Authority, have taken a number of different initiatives to be more flexible and collaborative when it comes to policy making for innovation. And that's really been welcomed by the majority of fintechs within the ecosystem. The proof is in the detail. So we're going to have to see the manner in which that plays out and how practically it manifests, and whether or not it fosters more competition between digital financial services providers and other fintechs, as well as the incumbents.
Riyaadh, we're going to come back to the policy situation a little bit later. Stone, you've heard Riyaadh's remarks when it comes to this David versus Goliath situation. What's your take?
Yeah, I think times are changing. Obviously, I come from the other side, but I think established traditional financial institutions like banks, the really large ones, have a massive disadvantage when they are playing in this space. Transactions, business is moving to digital, although it's slow. I think for anybody to take advantage of this, you have to be super fast. You have to be able to make decisions really, really quickly. And I think that's the disadvantage that established financial institutions have. Traditional banks, for example, could, it takes them years to do a simple thing, to introduce a new product or service. And on the other side, for startups, it's very, very easy to build these things, to make these decisions, as long as you're cognizant of the fact that this is, there's fraud and security implications. But I think fintech companies or fintech startups have a massive, massive advantage in terms of, pivoting to things that the market demands, things that have been brought about maybe because of COVID, products that you can introduce. I mean, Riyaadh just mentioned that they introduced 3 products since COVID began. That's not something that an established traditional financial institution would be able to do. So I think there's a massive opportunity around collaboration because, again, building in Africa, there's a huge problem with, the deep rails that we need to build on in order to provide our customers with the kind of products they have, and those can be offered by traditional financial institutions like banks. So we can work very well together. We face the customer, we innovate quickly, and the banks basically provide the underlying infrastructure that we need to get these things done. But we're going to see a lot of business going away from, the traditional bank or traditional financial institution and going to startups. There's a massive opportunity there.
Haguma, you've had the remarks of Riyaadh, you've had the remarks of Stone in regards to these established, enterprises, vast startups situation. You seem to be at crossroads regarding your position, but don't the established institutions have the lobbying power to drown the startups out? And they doing that already?
Yes,
Mr. Haguma?
I think what both
Norbert.
Yes. I think what they have both said, I do agree. We have seen on one hand that the local players have a certain advantage because they can move faster. So we didn't see much activity during the pandemic from the likes of Facebook or Alibaba on the continent in Africa. They had big plans, but they really weren't able to execute on much of that. And we've also seen the growth of the smaller companies such as SPENN and Eversend, who are very active in local markets and are very nimble and can do a lot of things. But in our case, we SPENN is our partner locally is INM Bank, and that really does give us an advantage to have a banking partner or to be a product of a bank, but also to act in a way as a startup. But one of the problems maybe we have seen in response to the pandemic from the institutional point of view, I'm sure in many countries they've launched some kind of a recovery fund that we're aimed at traditional industries, hotels and manufacturing and things like that. And it hasn't been very successful. So I think one of the lessons we can get from that as well is that what COVID has shown us is that there are new players in the market. There are new industries such as fintech, which are really proving capable of withstanding huge shocks. And those are the ones that should be supported because they create jobs, they enable players, both buyers and sellers. And so I think hopefully this is what we're going to see more of. We want to see more of technology companies that are really changing the game, that are being enabled instead of trying to support traditional industries which have shown the limits during COVID. So one of the things, for example, is remote working and the tools associated with it have seen a great increase. Even in Rwanda, we've seen local apps start up with that. And that again comes with the ability to send and receive payments, because to build successful platforms, you need to be able to monetize them. So that's what I'm hoping to see in the coming months.
Norbert, staying with you there, one of the points you're making is regarding your partnership. Now, could collaboration between the two players, established industries, startups like yours, be the way to go? And if it's the way to go, won't it slow you down?
No, I think it's absolutely the way to go because, as Stone said, a startup is much more flexible because of the flexibility in the institution, the decision making, the more relaxed or more agile way of doing things. But the old institutions, such as banks, do have a very, very important role to play.
Stone, what's your take regarding to that collaboration? Nobody's talking about collaboration. We've not yet seen Eversend, or if it has collaborated, we don't know about it. What's your view on that?
I think, like I mentioned, there's really no infrastructure if you're building, especially in Africa. It's a massive, massive challenge. I usually say this: if you're in Europe here, for example, you can go to a player and get a banking as a service product, which you can just latch on, plug in. 3 months down the road, you have an app that you can call a digital bank. That's not something that you can do easily in Africa because we don't have that underlying infrastructure. So what happens is that we have to build features and services, one by one, piecemeal by piecemeal, and most times we need to, work with existing entities. we do have very many collaborations almost in every country where we operate, not only for the infrastructure, but also for the regulatory angle. We do rely on our banking relationships. Yes, so we have a lot of collaboration, a lot of rails that we build upon that are provided by banks in the different countries that we operate. We have a partner in Uganda, we have a partner in Kenya, we have a partner in Nigeria. Pretty much everywhere we go, we have a collaboration with an existing entity, but it's not as close a partnership as you would have, say, for example, with SPENN. For us, it's pretty much, a commercial agreement where they are happy to, safely store our deposits, and we are happy to rely on some of their infrastructure and some of their regulatory strengths. So there's a lot of collaboration going on in the background that is not necessarily in the news because it's not necessary.
So that still makes your fees quite high.
Not really. So the way we build it. So for example, if we have to move money around, I'll give you an example of moving money. If we have to move money around, we might not have to rely on the bank to move the money for us. So there's a lot of innovation that is happening on top of that infrastructure. But for example, if we need to pull money from someone into the Eversend wallet, then we are relying, on an existing agent network that is provided by mobile money companies or provided or something provided by banks, and that can actually get expensive. So what we do is, how do we slowly make sure that we build enough numbers, we build enough capacity to be able to negotiate better. So I would say, for example, very specifically, I think one of the biggest challenges that we have is moving money from mobile money or from cards or bank accounts into the Eversend platform is extremely expensive for us and extremely expensive for our customers. So for example, in Kenya, we might charge our customers 1%. In Rwanda, we're charging up to 3%, which is crazy. It doesn't make any sense. We can't scale with that. But what we do is that, actually 3.5, what we do is that we are constantly looking for ways to reduce that burden on the customer. Sometimes we might even take it on, but you're right, it could make services expensive. But when you look compared to what customers are already experiencing, it's much, much better, a lot cheaper. I dare say, for example, moving money across borders is 7 times cheaper to use Eversend than to use a traditional banking institution or a traditional platform. Even the mobile money companies that may have a cross-border play will probably be more expensive than Eversend. So you're right in one way, but there's a lot of innovation going on in terms of pricing, a lot of negotiations where you find that eventually we have that locked down. So Uganda, for example, Kenya, for example, we've made big strides. Nigeria, we've made a lot of big strides where financial services in Nigeria are a lot cheaper because the industry is a lot more established. So I think it depends on the different countries, but we are constantly innovating to make it better.
Riyaadh, bring you back into the conversation. What does the future hold?
That's a very broad question. I think the trends that we're beginning to see now with the liberalization of data, with the formation of digital identities, with a number of data protection regulations and alternative licensing frameworks that are emerging, is I think we can expect to see a greater amount of interoperability between fintechs and the traditional banking system, which I think is key for financial inclusion. I think also, underpinning that is the idea of interoperability and allowing customers to be able to leverage the financial footprint that they've built based on their transactional history. I think, specifically for fintech, the future is really theirs to lose in terms of flexibility, in terms of speed to market, in terms of providing access to an untapped market, and really, being the enabler for policy objectives like financial inclusion. Really is, I think, fintech being the unlocking factor in this equation.
Thank you very much, Stone. As we end this conversation, where are the opportunities for players in the sector?
Yeah, I think pretty much everywhere. So what I am seeing is a lot of interest in various financial services. So there's a massive opportunity for cross-border money transfer, for example, where we play as Eversend within the African continent. There's literally no easy way to move money in most of the countries across borders. At least not with the fintech play. You can use banks, but that's going to take 5-10 days sometimes, and it's going to cost you very dearly, especially if you have to exchange money. We do see opportunities, especially around managing and creating wealth. So there is a massive opportunity to offer people better ways to do stock trading, better ways to touch crypto, to be allowed to use crypto both in terms of wealth and also in terms of moving money around. There are massive opportunities around payments because of this whole COVID thing. We see accelerated need for e-commerce. Of course, e-commerce comes with payments, and this is where Riyaadh plays. So we are going to see a lot of movement from just normal physical payment processing, but also a movement to online payment processing. So where some people can pay, pay with Eversend, pay with mobile money, pay with my bank card. How do we pay with all these different solutions across the different countries that we operate? So there are massive opportunities across the board. There's massive opportunities, savings and lending. We see everywhere because of the digitalization of financial services. Pretty much every channel, every angle you're looking at, you're going to see an accelerated growth curve for whatever you build.
Quite optimistic there, Stone. Thank you very much for making the time. Stone Atwiine, CEO of Eversend application. Thank you for making the time. Mr. Norbert Haguma as well, country manager of SPENN in Rwanda, and of course Riyaadh Hansloo, head of Risk and Regulatory at Yoco there in Cape Town, South Africa. Now, unfortunately, this conversation has come to an end. Hopefully, in the new year, we can talk about some of the things that Stone has brought up, cryptocurrency being one of those. As always, you can tweet us at CNBC Africa, or you could tag me directly at The Real Quizera to be part of this conversation. Have a great day.